Hi folks, I'm Alex Klingelhoeffer with Exencial Wealth Advisors. It's 7:04 here in the middle part of the country and St. Patrick's Day. It's March 17th, 2021. Here's your morning jog of headlines around the economic world. We're going to start off in Japan, where their prime minister intends to let their COVID restrictions roll off over the weekend, as they are really doing a reasonably good job getting vaccinated. Their hospitalizations are down quite a bit. It's another economy that seems to be doing the right things with regards to getting their populations protected against this disease, and in due course they're rolling back some of the restrictions on folks' freedoms there, and allowing folks to get back to business. Uber is going to start paying drivers a minimum wage in the UK. There was a big lawsuit for folks over there. Of course, their employment laws are quite a bit more strict than those here in the US. Now, the interesting thing about this story is when drivers are logged into the app, they're only going to be paid while a client is while they're waiting on a customer, on a client, or when they're driving. Those are going to be the hours that count for pay. I think there's a pension included. There's some holiday pay included as well. But it's only when they're waiting on a client or driving them, which is interesting because for Uber, certainly 30% of a day is waiting on a fare a lot of times. So it really doesn't necessarily truly compensate the drivers for the time that they're spending out there. But in the US, they're independent contractors. They don't have any sort of minimum wage protections or anything else like that. We're seeing a lot of additional protections. We're hearing about $15 minimum wage across a political spectrum. It'll be interesting to see if we see some of these additional gig economy apps, jobs, the Ubers, the Lyfts, etc., the Grubhubs. It'll be interesting to see if that sort of becomes a theme here in 2021, treating those folks as employees versus treating them as independent contractors as they are right now. Again, this is in the UK, but will maybe be coming to US shores here soon. We'll see. The 10-year Treasury is up a little bit this morning. Remember, we said there are two key data points today, St. Patrick's Day, that we're looking at before some lighter data, some lighter news expected towards the end of the week. The first is the Fed's decision here. We expect them to keep rates unchanged. I think that's pretty close to consensus. 6% economic growth, 6.5%. Hasn't happened in quite a long time in this country. How does the Fed balance growth versus inflation, making sure we keep growth high but inflation rather tepid? Folks are expecting something, and I was just thinking about this yesterday when I said, hey, this is the biggest Fed meeting in quite some time. It's certainly the biggest in a year, because we've been locked down for COVID for about a year. That's been an issue, and the Fed's hand was forced through the entirety of that process. They had to keep rates at zero. Money was pumped into the economy, fiscal stimulus, of course, monetary stimulus had to be accommodative. So this is really the first time where they can address some sort of normal policy, some sort of normal track. It'll be interesting to see where the dots move. I think they'll stay relatively constant. But this is going to be a theme. We're going to be watching every Fed meeting at hints of perhaps the short end of the curve going up. Certainly the long end, the 10-year, has been rallying for the last 7 weeks now, really on an up and to the right trajectory. The second data point that I wanted to look at here as we look at the 10-year bond up at 1.667 this morning is oil, because that plays into our themes of inflation, commodities, etc. API report came out with a small crude draw yesterday, And we'll see if the EIA report, we said, hey, this is the more trustworthy report. We'll see if the EIA report confirms that today. The important thing is refinery runs. Refinery runs. Are the refineries running at a normal or close to normal capacity? Remember, quite a few of them were shut down because of the Texas freeze. That will have a huge impact on the price you pay at the pump. How much gasoline do we have versus how much we can produce without our stocks going too low as we head into the summer driving season. Stocks are actually, and when I say stocks, I mean refinery stocks of oil and gasoline, they're actually the lowest they've been in quite some time, believe it or not, heading into a summer driving season. So of course we drive more in the summer than we drive in the winter. Stocks are quite low. It's interesting to see if refineries are up and running, and we see that price at the pump stay stable. Gas prices are quite high compared to where they've been in previous years. If you want additional information on these or other economic topics throughout the day, feel free to follow me on Twitter. I'm OKCCFACFB. Until then, I'm out.